Okay, testing, testing. 1, 2, 3, testing. 1, 2, 3. The rain in Spain falls mainly on the plains. The Anson France de Melania Pants. Guten Morgen, comment allez-vous? How are you? We got sound? We got chat? G'day, mate. How are ya? How's your mum? All right, I guess that's the signal to go. It is 8 o'clock in the morning in the New York City. About what, an hour and a half before Wall Street opens? It's our time as currency traders to come together in the community we call Forex.today to align our satellites, adjust, synchronize our watches, put together our trade plans for the day, for the rest of the week, for the rest of the month, for the rest of the quarter. Thanks for being part of the community. Let's go. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. In a moment of silence for our fallen brother in arms, Alex F. has passed away. He's been a member of our community for a few years, putting in the hard work every single day, patience and discipline. But he's fallen. Moment of silence. Again, our condolences to Alex's family. Alex passed away over the weekend. We'll miss you. May the pips be with you. All right, so here we are, back at our desks. We are in is it the second week yet? Yeah, I guess almost the second week of February. And what we've been waiting for is massive dollar weakness and a rotation out of dollar weakness, out of yen weakness into yen strength, and we will take a look and see if we have that. My name is Wayne McDonald. I'm a currency trader. Nice to meet you, by the way. COVID. Okay. Namaste, 6 feet away. That's the new saying, right? So, ask questions, get involved, and I'll do my best to share the many years of trading experience that I've had. I can share them with you, the good, the bad, the ugly, what I've learned to do, what I've learned not to do. Happy to share. Friday was my 15th year anniversary of trading non-farm payrolls live at FX Street. 180 months in a row. And obviously that wasn't my first rodeo. So anyways, this is your opportunity to grasp any piece of knowledge of Forex, fundamentals, technicals that you possibly can. And I'm happy to share. Now, these live streams on YouTube, they don't cost you money, but they do come with an obligation. I want to remind you of that. Your obligation is to visit tradersway.com and open up a demo account, or at least fill out the form. This way we can track that you are happy with what I'm doing and that these webinars are successful, that you are developing the skills and the confidence you need to one day maybe trade real money. So anyways, Trader's Way has earned my loyalty and respect, and maybe you can give them an opportunity to earn yours. Tradersway.com. And now we will go through some charts. Again, we don't necessarily want to see yen strength, but we want to see a rotation out of massive yen weakness and some dollar strength to massive dollar weakness. That's the biggest thing. And if you can recall, not so distant ago, yen was weak, but dollar was strong. And I said, wait for it, wait for it, wait for it, wait for it, wait for it. Probably April 1st, something we talked about 6 months ago is on or near or around April 1st, we would be massively short the US dollar. And the strength is now turned into weakness right on schedule, to the exact day, in fact. Cool. What an amazing Hail Mary. Cool. So now you got to find something to buy, and that's the tricky one, isn't it? Right now, across the board, the only thing to be buying is euro. Now, isn't that funny? There's nothing worthy of investing in Europe. I'm sorry if you're European, but it's the truth, right? Lagging economies and slow vaccine rollouts, investment do not create. But we have talked about the euro strengthening based on its position in the world, not because of its economic conditions, not because of its vaccine rollout. And it's a consequence. It's almost a victim. And I say it's almost a victim because the European Central Bank is doing everything it can possibly do to weaken the euro. And yet, despite that, right now, it's it's like the only currency in the world that's strong. And Christine Lagarde, Madame Lagarde, pumping her fist full of pearls to the sky, going, whatever she says. This is terrible, right? This is not what I want. I don't know. That sounded German. But anyways, yeah, amazing, right? But again, it's not because of her policies. It's because of the position of euro in the world relative to the flow of capital. So, too bad, so sad. At least we called it, huh? At least we called it. So now you got lots to short, but nothing to buy. All right, well, we'll work on that. So let's start with commodities. Okay. And by the way, thank you for your patience with me. While I was in Florida, I set up my laptop so that I could live stream from Florida, even though I'm on vacation. I'm happy to do the Forex.today webinars. Right, got my charts set up, got my live stream software set up. I rented out my favorite cigar bar so that I had, 4,000 square feet of space for me to do my webinar, which was really nice. And I had my coffee and my cigar and my Wi-Fi. Checked everything off the list. Then I get to Florida and Google says, oh, snap. We don't recognize your laptop. We don't recognize your IP address. We will not let you stream. We will let you log into your YouTube account. We'll let you log into your email account. So now it can see, knows the username and password to get into the YouTube account. Knows the username and password to get into the email account. But to live stream? No way, Jose. I'm like, you son of a bitch. So anyways, and for some reason, not a problem for my FX Bootcamp account. So I did my Forex.today YouTube videos Monday and Tuesday from FX Bootcamp. Why Google does this, I don't know. So too bad. But so anyways, I hope you got those. If not, youtube.com/FX Bootcamp, and you can get both those webinars there. Okay. And yes, if you're quick, you'll notice I stick the cigar wrong end into my mouth. The lit end, and I'm like, this tastes nasty. And I'm like, oh, wait, right? I couldn't stop laughing. Apparently, I can't multitask at anything. I can't even smoke a cigar and do a live stream. So it's pretty funny. So you can get there. All right. Here's our WTI, my oh my WTI. Lots going on here, as you can see, roll reversal, lower low, lower high kind of thing. kicking off a little bit of a double bottom. The question is, can we get lower? Can we get back to 50? And one of the things I've asked you to do is go to the EIA website and look at not only where we are in inventories, but where we are in the 5-year historic average or range in inventories. And then look at the seasonality of where we're likely to go. And if you do all of that, and I asked you probably a week ago to do it, so if you did it, you'd look at this and say, yeah, that makes sense. If you didn't, you're just the same trader you were a week ago. It's too bad, because I think you're trying to improve. Right on, Claudio. Thank you. Mucho gracias. Kevin says 25-year-old cigar. Yeah, which is nice. Avo makes nice cigars, and this was an extremely rare one. Extremely rare. So anyways, so I took that opportunity. I bought all their rare cigars. I got a whole bunch of Davidoffs. I got a couple of the Opus X, and there was a nice one. The thicker torpedo one, probably 52, maybe 54, which is very, very big for an Opus X. And Padron, 1964, got a couple of those. Anyways, but the Avo, the rare one with all that rare tobacco, it was $12. I'm like, what do you mean $12? Why not $22? $12. So it was a nice cigar. I'm just pretty sure you're not supposed to put the burning end in your mouth. I'm new to all this. All right. So, anyways, some down? Yeah, maybe. Okay, maybe. And remember, this is American oil, too. So one piece of thought is, well, actually, let me ask you something. Did anybody actually go to the EIA website that I recommended a week ago and actually do research? Did anybody even do it? I'll give you a hint. In that research, the EIA says that they expect this year the United States to import oil instead of export oil. There's gems of information that you should know as an expert, as a professional in the industry. So I don't know if anyone actually did the effort of maybe spending an hour over the last week. Did anybody actually do it? Yeah, Energy Information Agency. It's the U.S. government providing statistics and analysis of WTI. So I like to think that someone has spent some time. Okay? Thank you, guys. Yeah, thank you. But you should know stuff like that, saying, oh, wow, according to the latest research on EIA, because of the ice storm that we had in Texas, there must have been significant damage. And in fact, this year, even though last year was a massive export year of oil for the United States, this year they're going to need to import. You should know that if you're going to be a professional, right? And where do you get gems like that? You actually do the research, right? So anyways, I'm going to leave it at that. So hopefully you've done that type of research. And like I said, you know where you are in the standard deviation of the 5-year average. Are we near average? Are we above average? Are we below average? And where are we in the seasonality? You should know this stuff. Otherwise, you're not doing your job. Okay? So there's this bitch slap has been brought to you today by Forex Not Today. Yeah. So anyways, wake up. Okay, you're not on vacation yet. All right, bitty, coming back around off the top. So we went from 50 to 60. Are you going to get some new up? Is this a new opportunity? Okay, we'll find out. Okay, we'll find out. Very cool. One of the things that we talked about 3 weeks ago, that sort of the new paradigm in price action is up, sideways, up, sideways, up, sideways, right? Okay. David says, what do you do with the psychology if your win-loss ratio isn't good? Well, first of all, are your winners worthy of positive psychology? That's going to be the biggest thing. Are you making 200, 300, 400 pips? See, I get emails like gurus sending out like, we made over 100 pips this month. Send us money. I'm like, 100 pips? I got chunks of corn bigger than that, right? So make sure your winners are worthy of a positive psychology. That's what's more important. If your winners, let's say, are 3 times greater than your average loser, okay? Then if you lose 66% of the time, you break even. Okay? If you can do that, okay? If you can do that more consistently, so imagine that you can lose 80% of the time and only lose a little bit of money. See, the name of the game right now, David, is not for you to be making money, but for you to be developing skills. Because the real answer here is when you go through a tough period, let's just say you're going through a tough period, the only way out is by doing the work. Okay? The only way out is doubling down on your analysis, not trading more. Most people think they're simply traders. They get paid to pull the trigger. It's not actually true. In the long run, you're paid because you can predict April 1st, the dollar's going to weaken, and you can do it 6 months in advance. And how do you get that? You do the work. You do the work every day, every week, every month, every quarter, every year for decades. And you get better and better and better. So when you go through the inevitable tough periods, you handle those tough periods in such a way that it's not a disaster to your trading career, right? But you can back yourself off really quickly and focus on your analysis. Now, most people don't really do much of any analysis, so there's nothing really to focus on, and that would be the problem, right? Does backtesting have any benefits? No, not in my opinion. Because all you're doing is technical analysis. Look, if you don't know how to trade, you need to learn how to trade. If you don't know pivot points and price action and all that kind of stuff, then you don't know how to trade. You don't know when to buy at support and when to sell at resistance. That's a different problem. Right, David? So think about it. If you're a macro trend trader, let's just say you're a trend trader, right? If it's trending up, you buy dips at support. You don't need massive level of technical analysis for that. And if you're in a bearish trend, you sell lower highs at resistance. It's not that complicated. You can use any tool you want to figure out whether this is a lower high, lower low, or like this one, triple top. Oh, we're range bound. Okay? But well beyond technical analysis. See, technical analysis is mostly backward looking. Mostly, right? Not completely, but mostly. And then macroeconomics, fundamental analysis of global macroeconomics, it sets up the environment in which you play the game. Okay? So imagine you're playing blackjack or some other kind of gambling game that you play in a casino. Imagine that you don't know the rules. So as you're playing, you're losing. Oh, I guess I lose money if the dealer gets 21. Oh, okay. Oh, well, I have 21, so now I'm going to win. Oh, they also got 21. Oh, looks like the house wins that too, right? And you're figuring out these rules technically. You're trying to figure out the game by playing the game, and you're learning the rules, right? Fundamentals is the other way around, where you're learning the rules first, and you get to kind of see the cards. So like you get a 21 and you're like, ooh, I might be interested in betting. And then the dealer gets 21. You're like, ooh, I'm not going to bet in these circumstances. Right? Like, imagine that. Okay? Or let's say they allow you to count the cards. Maybe that's a better example. They let you count the cards. Okay? They even put it up on the screen. There's one king, two queens, no jacks. Right? And only 110 left in the deck. And you look at your hands, you look at their hand, and you look at the hands of everyone else at the table, and you're like, ooh, I think I only have a 22% chance of getting the card I need. I think I'll pass, right? It's kind of like that, where you're starting with the environment, then you look at the conditions, you calculate the odds, and then you make your bet. Okay? It's kind of like that. That's where fundamentals are, because you're starting with the environment before you decide to invest. Okay? And so I would, first of all, you have to master how to trade. You have to. It's a prerequisite for sure. And I have no problem with anybody learning trading by starting with technical analysis first. Okay? If you can't trade, you're not going to be successful. Okay? So, once you get that, then I want you to focus on the fundamentals, because then you can predict the future. And people will never pay you to trade the past, but they will pay you to predict the future. Sure, if that works for you, David, that's your alpha. All of that works. That's you're right. Yeah, you can, sure. I don't think it's that complicated, though. Okay? I don't think, like, the interest rates and the unemployment rate. Dude, is that... Actually, let me back up. Is that what we're trading? Is that really what we're trading? If you know by memory, or you can pull up your spreadsheet and say, the unemployment rate in New Zealand is 5.7%. A year ago, it was 6.2%. You know, is that what we're actually trading? No. What do we trade? The flow of capital. Okay? We trade the flow of capital, global flow of capital. So there's something besides that. And what it comes down to is, why is the unemployment rate the rate it is in each economy? What is the government, in particular the central banks, what are they going to do about that? And what is it likely to be in a year? So if we're talking about New Zealand, who's buying New Zealand's exports? And when will they buy more? Are they expected to buy more? Well, who's the buyer? How are they doing? What's their unemployment rate? What's their macro trend? Where's their supply and demand, right? And you put those two things together, forward looking. So you're like, oh, well, that would be China. So if China improves, New Zealand should improve. Good. So now go study China. Now, is it really that helpful to say, well, the unemployment rate is this and this other thing is that? Well, sort of. But it's more important to say, well, based on what they're reporting, what is the People's Bank of China going to do about it? What is the government of China going to do with fiscal policy? Are they going to stimulate the economy, or are they not? Now, the interesting thing is, I'm sure you're studying fundamental research from People's Bank of China and from the Chinese government, and you'll know that they're actually worried about a bubble, not unemployment. They're worried about a bubble, and the government has contacted the central bank, and thereby all the regional banks, thereby all the local banks, and said, pull back on lending, which is another way of saying anti-stimulus. Okay? So maybe this is bad for New Zealand. Okay? That's how you put these things together. Okay? So do you need a spreadsheet for that? You could do it that way. But the problem is, and I think a lot of people pitch this kind of process of, Unemployment went from 6.7 to 6.3. Buy. And that's not wrong, but there's more to it than that. And so the way I explain it is news is not fundamental analysis. News is news. News is a change. But what is the trend in the change? Okay, so that's a different question than what is the trend, right? Or something more than what is the trend in change. It's the next step is what will the government do based on the trend in change, and what will the trading partners do based on the change in trend, or the trend in change. Sorry, right? So there's a bigger piece. So yeah, you could keep a spreadsheet and no one would laugh at you for it. But for me, let me say it this way. On April 19th, 2020, I made a fundamental decision for my trading. And I haven't made a change. I don't plan on making a change. I don't think I will need to make a change in my fundamental bias, because the one thing that needed to happen happened. So do I need a spreadsheet? No, I don't need a spreadsheet, because the trends don't change that often, right? Trends are trends. So I'm probably done for 5 or 6 years. So do I need a spreadsheet? No, but it would be nice. And if you have that personality to organize and have everything there, then you should certainly do it. And I would love to see it. I just wouldn't love to manage it. Okay? Because I'd say, oh, that's really nice, but it doesn't matter to me. But if it helps you make the right investment decisions, then for sure you should do it. That's all I care about, is you make wise investment decisions. Okay? All right. Cool. So, okay, based on this news or this analysis, we'd like this to go higher. We are currently caught in a range. How do you want to manage the range, or how do you want to identify the range? Is the range this? Okay. If the range is this, which you notice that we've identified way back in February, then at some point soon, maybe near 55, one would anticipate, using technical analysis, from a bullish point of view, okay, a change in direction back with the trend. Can you see that? It's not predicting. Remember, charts don't actually predict. You actually are supposed to think. So if you're a thinking trader, you would say, well, I want this to go up. Why do you want this to go up? Well, because it went from 30,000 to 60,000. Cool. So maybe that, you're like, that seems to be an upward trend. Okay, all right, fine. So you might say you think we will be up here, let's say, by July 1st, the halfway point. Okay, good. So we will be higher. You don't have to really have targets and all that kind of stuff. All you need to know is you buy, right, at support. Okay? And do you like lower lows? Do you like lower lows? No, because a lower low is a drop. And you don't buy drops. You buy dips. So you don't like lower lows. So you need to recognize that now and say, lower lows are drops, and you don't like drops. Drops are for bozos. So now you have to say either you buy a dip or you buy a bottom. Okay? So a move up, a move down, and a move, all right, we will call that a dip, and you'll consider it. You'll consider it. Do you have to buy it? No. You will consider it. And it looks like you got days to put this together. The next thing is, okay, a bottom. Okay? Which is not a lower low, but simply outlines consolidation. Okay? So you either, right? So the conclusion is, if you're a bull, bulls buy at 55, bulls buy at 50. Look, we're done for the whole month. All right, that was a great webinar. I'll see you. Like, that's it. We're done. It's called planning. Okay? So we're at a price zone for you right now, and you're like, ooh, I like dips. I love dips. Cool. Okay? Then get in there, boy. Okay? And you start your planning. You start your trading. You start doing whatever the thing you do, whatever you consider your alpha, you get on with it. Okay? So, we're right in here. You're either buying it at 50, we've already hit 55, so you're getting on with it or you're not getting on with it. So I don't know what you want to do. I don't know when you're going to do it. I don't know if you're going to do anything. But you should be executing plans. Now, your plan might be, up in here. Well, that's your call. Whether you're going to do a double bottom, you're going to take a first shot, you're going to wait for a breakout, pullback. That's your decision-making process. But if it heads up from this area, well, it's not shocking because it's one of the only places that it would occur. Sort of like the conversation we had at yesterday's Forex.today FX Bootcamp collaboration webinar. We talked about that yesterday where someone's like, oh my God, this yen is surprising. I'm like, is it? Is it really? And we went through and I'm like, well, technical analysis tells you it's one of the only places it would occur. So is it really that surprising? And then, of course, seasonality base, I talked about it for 6 or 7 weeks in advance, actually 26 weeks in advance that this would likely occur at that time. So is it really that surprising? It's only surprising if you don't know. But if you know, then it's not that surprising. Okay? And so even technical analysis would tell you there's 2 places on the chart where yen would get strong. This is one of them, so it can't be that surprising. Same thing here. If you depends on how you analyze your charts, of course. But if you analyzed it like I just did, you'd say, wow, this 55 area is one of the only 2 places on the charts that would create Bitcoin strength. So is it surprising if it bounces here? No. Does it mean it's going to go up or does it mean it's going, right? No, because this is still certainly in play. Okay? Okay? The thing is, if you're going to buy the first touch of support or if you're going to wait for a second touch. Okay, I don't know how you're going to play this. Okay? Do you think a bear is going to sell here? Probably. But the thing with Bitcoin, are there bears or is it just profit taking? See, if it's just profit taking, we will go straight back up to 60 without hesitation. Well, that's an exaggeration, but nobody's really selling. If everyone just took profit because they're uncertain, but they buy back in because they are certain, there's no reason why we can't go back to 65. No one's really fighting us except psychology of the market. Okay? Unorthodox says there are bears. So are there traders that are buying one Bitcoin for $60,000 and then selling it? Okay. So Claudio says, I believe. And as soon as you say that, I'm not interested. So you have to back it up with factual statements. Okay. So you believe something? Okay. What am I going to do? Talk you out of your belief? You have to come in with solid research before you make a statement. Cool. All right. So gold, we've been waiting. We know around April 1st. Okay. We know around April 1st there should be a rotation into USD weakness, and that I want to confirm this with technical analysis before I buy gold, and sure is not. We got some sort of price action going. Nice. Go. Peter wants me to do XRP. Yeah, why not? I'd have to do it over here. So what is it? It's at $1 now or something, right? Beep. Beep. Okay. Okay. So once again, I see this and I'm just not interested. Right? It's more like... Right? So Peter's been on XRP right from the beginning, has total conviction for it, follows the market and the research, and invests. Cool. Right on. So after something like this, I'm just not even that interested. It's moved now, so it might be interesting for those that don't do the work. Now, Peter, I know you've done the work and you have conviction for this investment. So now that it's up here, great. So the only thing I can tell you is you're at a weekly exit and a monthly exit. Does it mean it's the end of the fundamental move here? No. How do you re-enter a trade that's just gone up, 100% in a week? Well, I don't know. You see, like, I don't know. Right? Like, is that normal? No. So all I could tell you is you're in troubled waters, and the best you can do is do the work analyzing. But is it going to behave like a normal market? Yeah, I doubt it. Yeah. Well, good for you. Are you going to get the yellow Lambo? Mercy, Lago, where we go, it's pronto. That's Pete. Oh, God. I like that song. No way. Gutta? Very good. Yeah. Yeah, money's for impoverished. Yeah, right on, man. Very cool. So remember, guys, in the back of your mind, you need to save your cash for your trading account. For those in jurisdictions where you have to pay taxes, make sure you start creating a tax strategy as well. That's another way, right, Peter? So make sure you educate yourself on things like incorporating. How do you incorporate? What type of incorporation do you need? License and registering, and then taxes around that, right? So there's it's almost like running a small business. Once you start make money, tax strategies become your second small business, right? Unorthodox as a Lambo can be investment. I mean, I don't know. I don't know how to respond to that. Right. Right. So this pays me, 50 to 75% a year because I own apartments. They go up. Lambos probably don't have a return on investment like that, nor can I leverage it really to say, well, will you lend me money against my Lambo? it's not probably the business deals I'm interested in being in. But, you know. Claudio says in Switzerland, capital gains are tax free. Yeah, sure. They're, you know. Yeah, that's right. Buy a Lambo and rent it out. Yeah. You know, and it's funny too. It's always poor people, and I don't mean it in a disrespectful way. It just sort of is, where they'll rent it so they seem rich. But by doing so, they look even more poor. So it's, you know, it's people going to their wedding in a Rolls Royce, chauffeured thing, and then they get in their Toyota and drive home. I don't know why people do it. I honestly, or why do people spend so much money on their weddings and they sit at the table like kings and queens, and the groom is wearing jeans and cowboy boots? I'm like, well, it's okay. Have the cowboy wedding, but you don't have to be a king and a queen. She might not be a princess. So anyways, it's just funny how we're still tied into this old tradition of we all want to be royalty. We all want to be billionaires, but it's actually a pretty rare thing, and it's funny to pretend. Right? It's strange how we like that, right? Do you guys remember Silence of the Lambs? Right? Expensive bag, cheap shoes. He spotted it in a second. Who are you trying to impress? Clearly, you come from a place, right, where the necessities are basic, but the accessories, right, are fancy. Well, who are you trying to be? Who are you trying to be? If you have lousy shoes, then what? You don't need the handbag. Right? Right. You have a tiny house, but an expensive car. You're like, who are you trying to fool, right? You should have a beautiful house and a crappy car, or not really crappy, but whatever, right? So anyways, I don't know how we got there, but anyways, yeah. So taking that money and reinvesting it in your business is probably the most important thing. And this is for all small businesses, by the way, guys. Whether you own a tool shop or landscaping or wedding planners, whatever it is, when you own your own, you don't have a job, you're a boss of your own corporation, right? Then any money left over should be reinvested in the business. Right? All the money should go back into your business. Right? That's what my opinion is. Why? So you can grow and get bigger, because you have a successful business. So if you reinvest into it, you'll get more money. So again, think of this as the solo growth model, where you're reinvesting. This is your investment curve should be higher than your depreciation curve. And if so, you will have more productivity or more output. Okay? So if you have a successful business, if you reinvest a significant amount or increase the amount you reinvest into your business, you will make more money. So that you take that money, reinvest that, and you make even more money. And then you take that money, reinvest it, and you make even more money. Okay? So maybe you rent your house. Instead of dropping, $1 million on a house, maybe you keep the $1 million in the bank and spend, $1 million house is what? $5,000 a month rent? You're like, oh, $5,000, I got that. But to give up $1 million, forget it. Okay? So, right? Grow. Get big, 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 and then throttle back. Okay? When you have too much money, then you can get your Lamborghini. When you have enough money, it's not enough. Right? If you have enough money, you're like, oh, I have enough money. I can get a Lambo. No, it's not. It's not enough. If you think you have enough, you should have too much. Then you can. Anyways, by the time you get there, you won't want to buy the Lambo, which is really funny. The only time you should buy a Lambo is when you don't want to buy a Lambo. All right. Cool. So weakness, 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 blah, blah, blah. Okay, great. So we'll go out to do some exotics. Got to get out of here. Why do I have this all marked out? I don't remember. Does anybody remember? Maybe it was target. Yeah, target. Okay, cool. So again, 2 trades, one at the top, one in the middle. If I get a trend, I'll get paid. If it doesn't trend, I don't get paid. So this would be a decision-making time. I was up 850. Now I'm up 812. So it's respecting this level of concern. Okay? We've been here before. Okay? 14.5. The thing is, will seasonality carry us through? And this is where you want to look at your MACD, for example. Yeah, I understand that, Robin. By the way, Robin, I got your email. Yes, let me get to it. I have a crazy busy day. I have like meetings all the way to probably 2 in the afternoon. So I'll try to get it today or tomorrow. If I don't, feel free to email me again. I just want to confirm that I got your information. Okay? Okay. So your MACD will tell you if you're moving averages. Whatever you want to use is up to your analysis. By the way, the standard MACD settings, I don't know who uses those averages. So I have custom MACD, and I would look at the MACD and I would ask it, was there an opportunity to sell off the top? And is the bearishness expanding right now or contracting? And so here you'd see contracting. Is it going to expand? So you might do that. So indicators, custom, MACD, is this the right one? No. Insert, oops. I guess there's not a lot of analysis here, so I'll just do it this way. Standard. Okay, there we go. So you want to look at this. Okay. Okay. What does all this tell you? It tells you that MACD is currently neutral to bearish. Okay. The 21 is below the 55. Okay. But they're pretty close, right? They're not quite kissing, but it's right. But what we're looking at is, will this part of the motion continue, or momentum, if you will? Okay. So at this point, when we're below this number, the market is bearish. Okay. And now we want to see, right, we're looking at this now and have it come down this way. If it pops up, it'll technically not be bearish. Okay. Now, Claudio says, looks like a bottom being formed. Maybe. Maybe is what it looks like. Okay, so don't read too much into it. And it's not yet. Okay, it's not yet. Now, if you were a bull, you might tease this out by buying a triple bottom. The one thing that's not here that might come into play is the seasonality of the US dollar that didn't exist on the first touch, didn't exist on the second touch, but now does exist on the third touch. So you don't see, it's an invisible hand, if you will. So I'm not looking at this as South African Rand, however. I'm just looking at it as US dollar weakness. So the next step is you can say, well, there's an invisible hand that might push this down. So we got that set, let's say. We'll set that as dollar weakness fixed. It will stay weak, generally speaking, for the indefinite future, right? Let's say the next month or two, okay? So it comes down to now you have to tiptoe back in and say, what's going on in South Africa? Okay, can this strength continue? Or are we at the logical conclusion? And I can tell you some people logically concluded that this is over. If you're on the weekly chart, it says that we're beginning a new move downward, right? Wouldn't you agree with that? Okay, and what that is this process right here. Okay, we hit the 21, we came down, lower high, right? And that it's going to ride the 21 down. Okay, another way of looking at it is under the rules of engagement. Now this is weekly charts, so it's slow as molasses, but under those rules of engagement, right? When you're under the 21, you're a bear and you're aggressive. And in this case, if you're using this analysis, I'm not saying this is the right analysis, but you certainly could use this and therefore make a decision. And if you were making a decision based on what I see on this chart, then it's not that you're selling, but you're 100% certain you're not going to sell out. But it's not really on this chart. That's why I have to go way out here. Okay? That's why I got to go way out here to make that decision. But if you're using this analysis, the first thing is the 5 is below the 8, the 8's below the 21 is below the 55. Yeah, we're hesitating around the 200, but it's because we're going to breach it for a downtrend. Okay? So you've waited since November. It's game on now. Okay, that's why I sold this, and that's why I sold that. This one I sold the high. This one I sold the lower high. Okay? So the question now is, there's really only two camps. They say this, and others see this. Okay? Which one's right? I don't know, so pick a team. Okay? Remember, I don't know. Okay? I don't know. You don't know, but you better make some decisions. So at the very least, let's mark this as an area of concern. Okay? Do boop doo doo. Cool, right? Can I get a like? Whoop whoop. Less than half of you have clicked like. Would you please click the like button? Tell YouTube this is quality content. Pretty please. Please. Okay? Let's see. I give you trade plans like this. Good job, everybody. Good trade. Good trade. Nice. Chronograph said nothing's happening in South Africa. Well, that's good, actually. That's good. Right? If the politicians keep the power on and their hands out of the piggy bank, then that's good. That's more than what the world expects. So no news is probably good news. So we have a streamer in the chat. All right. All right. So let's move out of exotics now. And let's look at some dollar pairs. Was that right? All right. We're going to do yen then. Hey, man. All right. Cool. So we'll see here if we can breach. We're going to need to breach through this. Okay. We're going to need to breach through this. We're a little hesitation going on. So before we panic, what do we know? We got modest liftoff from the previous period. A little bit of a step up, which is fine. But what do we also know? We expect yen to either be less weak, okay? Certainly, let's just say less weak than it has been. So when Aussie yen's been going up, the yen itself has been the weak party. Like Aussie's been on and off, but this move is generally yen weakness. And that has a lot to do with seasonality. And then we knew right around the end of March, early April, that a lot of that weakness is likely to dissipate and that we need to rotate into selling US dollar more than selling Japanese yen. So now we're here, and we have it marked up technically, but I want to remind you of our conversation when we set this up, that Aussie dollar would likely end up being the better trade, even though Aussie yen has been the better trade. But we're not talking about things on the chart now. We're talking about fundamentals. We're talking about seasonality. In this particular case, seasonality. So this is a seasonality rotation. And that really Aussie yen could be up to sideways, maybe down, but I don't really want down. Okay, so there's a bigger story here than just this technical analysis. That this might go up to 87, but Aussie dollar is probably going to be the better trade. So, okay, so there's that. So again, back to what we know. There's been a modest liftoff from the last period, last month, and there was a reasonable entry based on pivot points. There's a position entry here, but no follow through. And this has to do that rotation, right? So should you be concerned? Yes, not that it can't go up, but that the analysis, like your trade plan, may not have unfolded the way you planned. Okay, so you'll have to make decisions. So if you entered in here, okay, you're probably getting knocked out right now around break even. And that's okay. It's totally okay. Because if the market conditions change, you can re-enter. Right? There's a difference between being a bull and being stubborn. And stubborn bulls end up losing money. Stubborn bears end up losing money. So if the trade plan was buy here and head up to this area, and remember, right, then that's cool. We actually have it trapped. So I want you to remember the conversation. In this case, even though it's technically set up, we're expecting the seasonality fundamental rotation out of yen shorts into dollar shorts, which could make this yen trade mediocre. Well, then what's mediocre? Instead of instead of a dip, it creates a bottom, or in this case, a bottom to a range. So we had talked about yen's doing like up, sideways kind of stuff. And we're probably in that situation where if there's going to be an up, there's going to be the down first, then the breakout. So it's going to be late to the game, and then it's going to come all the way back. Okay? And then probably stay up here for a while. And that's part of this. So we had the up, the sideways. Okay? Now we are in April. We were, either here or a little lower. We then kind of head up and then move sideways. And that's all the messaging behind this trade plan. Okay? If it wasn't for seasonality, where'd she go? If it wasn't for seasonality, if I was just pure technical and bullish, which I am bullish, I would have thought breach, right? I would have thought this. Okay? I would have thought something like this. But I don't because of that rotation into the dollar trades and out of the yen trades. So I expect more like this, which is range break to the upside because I'm bullish in general. I think the Australian economy will do better as China does better. Okay? And if so, maybe this month, maybe next month, we fart around up here instead of farting around down here. And that's the up, sideways thought process. Okay? Rookie says seasonality is a predictable change that repeats every year at the same period. Yeah, that's a little too strong. But again, the analogy that I like is farming. You don't know what the weather's going to be like any given day, but generally speaking, you know when winter is likely to end, you know when the rain is likely to arrive, you know when the drier period is likely to be there, likely when you don't know if there are going to be bugs this year, but there usually are, and therefore you might actually buy chemicals in advance of the bugs showing up, whether you get locusts or grasshoppers or something. But you might say, well, generally I put some pesticide down. Generally I put some fertilizer down. What day do you put it down? Well, you don't really know what day, but you have a general idea. A little in the spring, a little in the fall. You don't know the day it's going to rain. You don't know if it's going to rain. You just know it probably will rain in certain months and not likely as much as other months. But it could be a drought this year. It could rain way too much this year. You don't know, but you know generally what to expect. And again, you don't know what day you're going to harvest, but you know what month, certainly, maybe even what week or two within a 2 or 3 week period, probably when you're going to harvest. So you got to, while you're waiting, you got to invest money into your depreciating assets, which means you have to tune up the truck. You got to clean up the storage bins. You got to, repair your combine. And so that when you get to that period, you've taken steps beforehand to be prepared and be ready, willing, and able to harvest the day you think it's going to harvest, right? And inside of that, you got to buy crop insurance and all that. And so you don't know exactly what's going to happen. Every year, the variables are different, but you also have a general strategy and you have general experience, and you also know generally the seasons and how they can impact the variables. But do you know if it's going to be a drought this summer? No. Okay? You see? So we're like that too. Okay? Cool. So I had this idea based on seasonality that yen isn't necessarily going to be strong. I'm not really saying this at this moment because technically it doesn't say that. I'm saying more like this for yen. And I also know that Aussie is more like this. It's a little up, it's a little down. I've read the numbers out of Australia, and it's still quite meh. but there's some hope there, and that this yen weakness that was around is probably dissipating, but not necessarily reversing, but could, but not yet. And so we have all this up to sideways. But of course, what we said is, if you like that, and if that trade has treated you well over the last several months, maybe this one's the better trade. Maybe. Not necessarily, but you're ready, willing, and able. So now you look at this one, okay, Aussie versus dollar now. What do we know? Well, this is a good price to be a buyer. Okay? We know that. A long-term buyer, meaning a buyer of Aussie dollar in the month of April is targeting somewhere between 79 and 80. Okay? Probably not 80, but certainly 79. That's what bulls are thinking. And this is the key price right in here. Okay? Cool. So, we know that to be true. That's self-evident. That's what technical analysis tells us. Okay? Now, the second part is, on a weekly basis, we know this is a buy. So I'm assuming if you were a bull, when the market opened on Sunday afternoon, New York time, you bought it right there. That's the Asia Open. Okay? Cool. And you're targeting here. Well, we might be early. Cool. So let's take a look. What is the range we're playing? Well, we got something going on in here, right? And we got, let's say, this going on. Okay? So there's definitely something that might happen here. How do you want to treat it? Well, you might say, because you're a bull, for seasonality reasons, or for fundamentals, depending on what you've decided, you would say to yourself, okay, I'm going to treat this like an Aussie dollar reversal, where Aussie dollar, right, versus US dollar has been generally down for a while, and that you think we're going to end up this way. So now what you'd like to see is at the right price, and we know this is the right price, so we got that identified. You are going to use technical analysis to try to determine the right time. You already know the right price. It's a timing issue now. So in that case, you say, well, how about a reversal pattern? What reversal pattern tends to look like this? And you say, well, it could be a head and shoulders. Okay? Inverse head and shoulders maybe. And you're looking at this area, and this area. So now I'm going to do this in green, where this might be an interesting zone for you this week. Okay? And then this is your interesting zone next week under current market conditions. And that you're observing the market and you're ready and prepared, or you're readying yourself to be prepared to execute your strategy, which is different than just throw down a trade, right? Okay? But if you don't have the seasonality in mind, if you don't have maybe improving economic conditions in China for an increase in demand in Aussie, then you might not have any of this. Okay? I don't actually like the Aussie right now, so let me be clear. I don't actually like it right now, but I would probably take a shot because of the seasonality issue. Okay? So what I told you, I don't know, here. Okay? What I told you here is this is probably the week in which the trend will change in Aussie dollar. How many people here can confirm that? That 4 weeks ago, 8 weeks ago, 18 weeks ago, I said if there's going to be a change in trend, this is going to be a very key week for Aussie. Okay? So I don't know. It's more like around this period, I get very antsy about wanting to plant seeds in my fields. As a farmer, harvesting pips is my job. And based on my years of experience, somewhere around now, I really want to get in the fields and plant my seeds. I don't know if it's the right time, and I'm looking at the weather, and I'm out there, and I'm right, and I have the soil in my hands, and I look to the sky and I say, is it now? Is it right? It feels like it could be. Do I plant? When do I get into the... And of course, I don't want to be in the field going, oh my God, these conditions are perfect, but my tractor's broken. Oh, I should have fixed that like weeks ago. I've had nothing to do. I should have been fixing my tractor, getting it ready to till the soil and plant my seeds. I should have ordered seeds. Like, oh my God, what am I doing? I should have had a plan. Okay? So, you don't want to be that farmer going, gee whiz, I wish my tractor worked. Gee whiz, I should have ordered seeds from Monsanto weeks ago. Boy, I should have prepared more. You don't want to be that farmer. Okay? You understand? That's what thinking ahead is all about. I want you to think about the farmer. You got to be weeks in advance. Oh, wait. I'm going to need to plant in the next month or so. What do I need to do to plant my field? Okay, I need to make sure the tractor is in good operating condition. And that part that always breaks, I should order a spare part just in case. I should, where do I have the tiller? Oh, yeah, it's in storage. Okay, let's get that out there. Let's sharpen the blades. Let's make sure there's air in the tires, and you're thinking weeks in advance, predicting the future because you're a genius. No, you're a farmer, dude. You plant in the spring, get ready, do something. GMO pips are the same. Yeah. Yeah. I knew as soon as they said Monsanto, hey, Olin, someone's going to freak out on me. But so anyways, so a bull might say, look, if we measure this, we got that. Now, I would actually measure it differently. So I'm going to do it like this. Okay. I know it's slightly different angle and all that. Okay. I'm going to do it kind of like this is plan A, and then this is plan B. Because let's face it, as a bull, I don't want to do the whole head and shoulders thing, right? I don't want to do the whole inverse head and shoulders thing. It could happen, but I really don't want to do it. So I'd like some up now. It'd be great. I'm probably not going to get it. But it worked here, 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 it worked here. It could work here. It could. I'm not saying it will, but it has. So I could say, well, probably today I can look at it. And if I rotate, right, 5A cross up here, I could take it. I could try. Okay? Or you just throw down, right? You throw down a day trade. Oh, well, let's look at the day trade. You ready? Okay, first of all, let's get to this to a 15-minute chart. Second of all, template. Okay, day trading bullish. I'm a bull, so day trading bullish bias. And right now it's saying this might be an awesome entry. Now, it's going to fluctuate as we move, because remember, it's backwards looking. Okay, so I sit and I wait. Okay. Okay. Does it mean you pull the trigger? I don't see a trigger here, do you? I don't see a trigger here. Okay. Okay. I don't see it yet. All right, who wants to do pound dollar? Unorthodox. Yeah. Monsanto? Really? Yeah. I couldn't think of another seed supplier, but I knew I was, yeah. Yeah, it is pretty evil to think that you sell seeds that, what, only germinate once or something? Like, the engineering behind it is amazing. All right, cool. Basically the same analysis. Well, Mahir, if that's true, then it's dollar, right? And that's what we've been looking for. So thank you for bringing that up. If it seems to be generally the same, then it's not dollar, it's not Aussie dollar, and it's not pound that we're trading, is it? Okay? Then it's dollar that we're trading if it ends up being the same. And that's what relative strength is all about. Okay? Cool. So let's take a look at this. Let's back out a little bit. So we know we're on high. Okay? We know we're coming off a top. There was a beautiful trade plan we had set up at the beginning of March, so I guess a month ago. And that was to lead to a new high. Not that it's a prediction. Remember, none of this is predictions. It's technical analysis. So a 618 predicts, or this type of analysis would suggest, because you're filtering it through a bullish bias, right? So if you see this as a high and this is a low, you're going to say, well, 618 often leads to a 1382 if there's a trend. If the trend is to continue, it is likely to continue in a similar fashion as that. That's all it says. So when it fails, and after 3, 4, 5, 6, 7, 8 days of that, it did fail. What does it tell us? Statistically speaking, much less likely for the up. Cool. Okay? Also, we know in this period to expect dollar strength, don't we? Now that dollar strength period, historically, or based on seasonality, may have passed. It could rain today, it could rain tomorrow, but it doesn't rain as much this time of year. But it could, but it often doesn't. Okay, you could say April is generally dry, or the opposite, wherever you are. It's generally wet, but it doesn't have to rain every day. It's not a guarantee. Okay, so what you want to look for now is, if you're a bear, you know this period here is bearish, and we'll mark it that way. And what you're looking for is statistical changes in M. M equals rise divided by run. Okay? So now you're like, okay, we have this. That is true. And we're using now statistical analysis, or you could say technical analysis. But remember, technical analysis are statistical tools. So you're really doing statistics. Okay? And you're saying, well, statistically speaking, is it bullish yet? Because you expect it could be sometime soon. And you look at that and say, no. Now, isn't this interesting that that's one standard deviation from the mean, right? Above the mean. My mouse is really having troubles now. I don't know why. Okay, so we're one standard deviation above the mean. This will be one standard deviation below the mean. So let's filter this just as intellectual exercise. Let's filter it. How many people here would like pound dollar to be bullish by the end of the month? By the end of the month. By May 1st, you'd like to see mostly green candles, right? 5 green candles, 2 red candles, 5 green candles, 2 red candles. Okay? All right. So that's what you like. But the market doesn't care about what you like. So now you have to do your research. You have to do your technical analysis. You have to do your statistical analysis. Right now, the rise over the run is a negative number. So it's not happening yet. It doesn't mean it won't. Okay? Now, if you are correct and we are going to be up here, okay, that means you prefer right here and right now not to go one standard deviation below the mean. Okay? You don't like that. This is not because if it happens, I think the probability of being way up here in 3 weeks is probably diminished. The probability is less likely. So if you get this right, we don't really want to get down here, do we? So what is it that you're really looking for as a bullish pound dollar theorist? You don't want to go lower than that, do you? So you need to be RWA, ready, willing, and able, to use your tools in such a way that you see outliers becoming new trends, and therefore, instead of going from negative M is equal to rise over run, okay? Instead of that part, you want to see a positive M, in which maybe you get your trades on when market conditions are like this, you're going for our X up above. Okay? When it's falling, M is negative. So you're like, nah, skip it. Then when it moves sideways, M is equal to 0. And you're like, well, that's better, but maybe not yet. But then when M turns positive, you're like, game on, and you're buying at a dip. See, if this goes up to 139.50 and comes back down to 139, you're buying a dip. This ain't a dip. Okay? So you need the bottom to form. This is a drop. Okay? This is a drop. You don't buy drops. Okay? This is a bottom. Bottom. You can buy bottoms. It's up to you. Okay? And this is a dip. So, dip. So this is your proprietary decision-making process, otherwise known as alpha. And right now the beta is bearish, so you make your decision. You believe this is going up, but statistically speaking, it's going down. You make a decision now. Okay? And here's the thing. What if it does drop further? Do you still look at this from a bullish point of view? Okay? Cool. Now, let's move over to Euro. Here's my theory, and I've taught you this for years and 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 years. Euro dollar, okay? Euro dollar is equal to 40% of Forex. Think of Forex as being an index, not an equally weighted index either. So an index is a basket, okay? And you throw all these currencies in and say, how is the dollar doing? Now, if they were equally weighted, it would say, well, if we have $1,000 worth of Canadian dollar, $1,000 worth of Australian dollar, $1,000 worth of Kiwi dollar, $1,000 versus of British pound, $1,000 versus euro, $1,000 versus whatever, yen. And you throw them all into a basket and you shake it up. And over the period of time, you keep looking at how these things are changing in value, because you started with the same amount of foreign currency from all other countries, $1,000 worth of whatever it was that day. And now you're looking at the value of the basket. So let's say you do 10 foreign currencies, so you have $10,000, $1,000 of each, let's say. And now you have this basket, and on day one, right, it was worth 10,000. So on day 158, is it worth 12,800 or is it worth 8,200? Well, you've created an index, right? So now you can say, oh, it's less than it used to be, or it's more than it used to be. That's what an index is. Okay, cool, great. What if 40% of the basket, right, you had $4,000 of your $10,000 in euro? Ho, 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 ho. Really? Okay. So it's not a fair basket. And then you might only have $500 worth of Canadian dollar, because you might have 3,000 in pound, 4,000 in euro. You're like, dude, we're 70% in, but you only got two currencies. Oh, well, I'll throw 500 toward CAD. I'll throw 200 toward Kiwi. And you're like, wait, this isn't a balanced measure. Okay. But it is an index. It's just a non-equally weighted index. So when you look at the Bureau of International Settlements, the BIS, it's a central bank for central banks, and central banks are banks for banks. Let me say that again. There's a central bank for all central banks, and central banks are all banks for banks. Did you know that? When you hear that Forex is $6 trillion a day, it's the BIS saying that, because it's looking at daily turnover from central banks who monitor daily turnover from commercial banks. Okay? Oy vey, huh? Isn't that amazing? So here's my theory. The most important currency in the world is the reserve currency. And if market conditions or the policy of the central bank managing the reserve currency simply says weak dollar, euro dollar goes up. It's going to be the most affected. Has nothing to do with European central banking policy. If the dollar weakens and almost half of it is euro, euro goes up. So on a day where the dollar's really weak, however, pound is weak, Aussie is weak, Kiwi is weak, CAD is weak, you're like, everything's weak. Euro dollar goes up. Why? USD. Because the only way to weaken it is push the... See, think of it. It's not that people are buying euro. It's euro in terms of dollar. And kind of like you can look at it like 40% of the dollar is euro. So it's sort of a mechanism of the machine. Euro's like, dude, we're doing everything to drive the euro down. Don't invest into Europe. Don't buy our bonds. Right? Don't come to Europe. And instead, euro gets strong. And they're like, son of a... Why? It's the Fed. So this is my thought process. I might be delusional, mental, okay? Mentally deranged. But how many people here can confirm that at least 36 times you heard me on April 1st, euro dollar goes up? Not the 2nd, not the 3rd, not March 22. How many people could say dozens of times? You're like, well, I've been keeping tabs. Wayne, you told me 36 times. Okay? Oh, sorry, Chuck. You're right. Bank of International Settlements. Makes sense, right? Bank for central banks. Okay? All right, cool. So let's take a look. You mean this day? Crazy. Look it. The exact day was the bottom. Cool. The problem is, and I said this too, Europeans won't even see it coming. See, they're bankers, they're not traders. Okay. Why the first trader? It's part of my genius. Right? As an ex supermodel, I cannot tell you our secret organization information. You have to be in the International Order of Ex Supermodels. Yeah. Yeah, but it's cool though, right? It like why? Who cares? You should be able to figure it out. You should be able to do research analysis. I've told you a million times. But ultimately, like, who cares if you know it? Illuminati. Yeah. They only teach it at Harvard. Be funny because, of course, they didn't. But that'd be a great answer, huh? Oh, well. See, Harvard is actually interesting because they do have a bunch of secrets. They do have secret ceremonies all the time. There's these traditions and ceremonies, and it'd be great just to think like, oh, well, right? The man in the black hood told me, right? All right, cool. So, anyways, how do you trade this? You day trade it. Okay. So here's the flippin' day, which is funny, right? So, dip, not a drop. Okay. This is a roll reversal. Simple 1, 2, 3. Dip, not a drop. Roll reversal. Dip, not a drop. Okay. And now, woo, way up here. Okay. Also, if you attended Trade Non-Farm Payrolls live with me at FX Street, holy smokes, was that awesome. And it was all about dumping the dollar. Now, I spent close to the hour before the meeting, probably at least half of an hour before the release. I explained how non-farm payrolls were going to be higher than expected, maybe even 1 million. That unemployment rate was going to drop very significantly. However, average hour earnings would fall. Do you guys remember that? We'd have a huge non-farm payrolls. Unemployment's going to collapse. Yet wages will fall. How about that? And sure enough, exactly that way. And so I hope you were attended because I went the extra mile to explain what it means and how I can come up with an outrageous answer like that or prediction. But most importantly, so that you simply understand, like guessing, I don't have a career on guessing. I hope you appreciate that. I think there's probably a lot of gurus that make wild predictions like clickbait. The 7 stocks you must own, right? That kind of stuff. Oh, my big prediction, my giant trade. You just have to know more about it, right? If you sign up for my newsletter, I give you my big trading ideas of the month. Instead, I like to teach you economics and finance in such a way that you understand how I got there, the path I took, the thought process that I used, and of course, that I may know or may not know or may likely know, or just this level of understanding so that you don't need to have a Hail Mary career, big giant predictions of the month. Instead, you just understand where we've been, where we are, and where we're likely going, and you can make informed investment decisions. I hope you appreciate that. But I'd probably be more successful if I hit you with clickbait. Krugman, Paul Krugman, the Nobel Prize winner in economics, Krugman? Is that the right Krugman? Holy smokes, I just got my pool permit approved. Boom! Damn, let me see that. Boy, that was like pulling teeth. Residential pool permit issued. Your residential pool for blah, 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 blah. Permit number, blah, blah, has been issued. Yay! Boop, ba-da, boop, ba-da. America. See how efficient it is? It only takes a year to get approved to install a pool. Only a year. But the HOA is coming over, and I think they're going to disapprove me. I'm like, anyways, cool. Man, I've been waiting for a long time to get that. Unbelievable. Cool. Nice. Now that COVID's over, right? Don't worry, it's not over. By the way, we're going to party at Maida's house coming up soon. Maybe this fall. And then we're all going to jump on the FX Bootcamp private jet, and we're going to fly out and party at Gary's house next. So get your pool body going. Get yourself some Vibiliqueen swim trunks, and get ready for South Florida and the Caribbean. What do you guys think? Does that sound good? In his masterclass course, course recorded before Corona, Nobel winner Paul Krugman, yeah. Now Indian Warren Buffett. What? This is yours, right? Yeah, cool. Nuno says, are we all invited for a swim? You know what? To be honest, it's been crazy difficult, this process. And I don't think I'm even, like I said, I think the HOA is going to use their power and not let me do it. But with COVID, it's been such a crazy journey to do something like that. And I thought back in the beginning, when coronavirus hit, that this would just destroy the local businesses. So I immediately called them up and let's do this. Let's get this going. Quite the opposite is true, right? Quite the opposite is true. All companies, all of them, they have 300 or 400% more orders for pools. They don't, right? They don't have the workers. So I was in Amelia Island, Florida, just yesterday and over the weekend. And I talked to one of the biggest developers out there, commercial real estate investors and developers. He owned the cigar bar. He owns a couple of golf courses. He owns some places on the island, that kind of stuff. And he doesn't even live on the island. And so I was talking to him and a couple of other people. And of course, he knows everybody on the island. And the people he knows owns the restaurants and owns the hotels. And he said, right now, by far, the biggest problem is that they can't get the workers. I want you to listen to this as an economist. It's not the lack of tourism. Okay? It's $1,300 a night to be at the Ritz-Carlton for their crappy room, with the view of the laundry truck showing up at 6 o'clock in the morning with the reverse horn going beep, beep, beep. $1,300 for that room. Full, packed. There's a lack of workers. Lack of workers. And he said the restaurants are the same. He's like, he knows all the other restaurant owners and stuff. They're all buddies. He cannot get workers. The restaurants cannot get workers. The golf courses can't get workers. The hotels are struggling to get workers to clean the rooms, to get workers to make cocktails, to get workers to make the $32 pieces of sushi. There's no workers. And do you know why? They would make better money on unemployment that they're getting from the government. And the businesses are like, oh my God, we need workers. Gas stations need workers. Fast food restaurants need workers. Department stores need workers. They're begging for the help. They have the business. They have the jobs. They're ready to pay people. And people that take the jobs are like, no, I'm just going to stay home. And I know in my community, every single restaurant has help wanted sign. Pay them more? Okay, well then we're in this situation. Okay? So there you go. Pay them more. There's only so much money you got. So the Ritz-Carlton is open. They do have workers. They probably have to pay them a lot more. How many people here are willing to pay $1,300 a night plus the resort fee plus $27 in tax or 20% in taxes because you got to pay local taxes, then you got to pay the tourism tax on top of that. So it's a minimum $1,600 a night for the crappy room. By the way, 2 years ago, when they had workers and the economy was doing just fine, it was like, I don't know, $500 a night for the cheap room, maybe $600, and the fancier rooms were probably $1,100. Okay? So I would have to guess, because of the current policy, which at least the local business owners blame on the government, and I understand as an economist how all this works. You don't have to work, so why would you work? So now, because of this, if you think of the policy of price ceilings and price floors, okay, the model suggests that the price of the Ritz-Carlton would go up. And right now, the model suggests it will go up. The real world shows that now you have to pay at least 100% more than normal to stay at the Ritz-Carlton and actually have someone clean your room and actually have someone work at the bartender as a bartender. Okay? Someone to actually make water that tastes like lemons and cucumbers. To get the workers to do that for you, you have to pay 100% more. Guess what? That's what happens. That is what happens when the government steps in. And I'm not just picking on this one thing. Anytime the government steps in, there's unintended consequences. So, for example, and I think I explained this in one of the macro courses, when the government says, we have a solution for the housing shortage in San Francisco. There's a housing shortage. The prices are extremely high. Only rich people can live in San Francisco. So we're going to come in and we're going to push the prices down and make a maximum. Instead of the market price of $3 a square foot, we're going to say the maximum is $1.50 per square foot. 10 years later, nobody lives in San Francisco. There's a massive shortage of housing across the board, and it'll be desperate. And they're like, but we pushed the prices down. Yeah, but then no developers develop new. Okay? So, long story short, what have we learned? If people needed those jobs because they ran out of unemployment insurance, they might be working at the Ritz-Carlton. They might, right? But see, and now you'll say, well, but they would be making less. Well, okay, the Ritz-Carlton would be $600 a night, not $1,200 a night. But here's the thing. You're going to run out of people that are willing to pay $1,600 a night. They'll just stop showing up. And now everyone has 100% of nothing. You understand? We equally are dead broke. What you would rather have is a flow of money and income. Money and income. See, my spending, right? My spending will become someone else's income. Because when I go to the Ritz-Carlton, right, the owner of the Ritz-Carlton makes money. The managers at the Ritz-Carlton make money, right? The shift supervisors make money. The bartender makes money. The maids make money. Even renting me chairs. I have to pay money to have chairs to sit out on the private beach and the view. And I'm, all of this, everybody, all of a sudden in the economy, I'm going to the, maybe I eat 3 or 4 times in the Ritz-Carlton restaurant, but the steakhouse across the street, I'm going to try that. That makes money. The cigar bar, they make money. Right? And all of a sudden I'm spending all this money, but it's somebody else's income. And now the cigar bar pays rent. The steak restaurant, I bought steak from them. The manager gets employed. The chefs get employed. The kitchen preppers get paid. The dishwasher gets paid. The maitre d' gets paid. The waitresses get paid. And the waiters get paid. The owner of the restaurant gets paid. The landlord that owns the land gets paid. It's all their income. Okay? But if I don't go because I'm like, that's bullshit, $1,600 a night for the crappy room, the Ritz-Carlton, forget it. I'm going to Mexico. Then Mexico wins, and then everybody on Amelia Island goes broke. The restaurants shut down, the hotels shut down, people lose their jobs, and it turns into, I don't know, Kiev. Right? Or how about Bielorussia? I've never been to Bielorussia. I wonder what the nicest hotel in Bielorussia. We should probably do that. I don't even know how to spell it. Bielorussia. I don't even know. So, what's the Yellow Russian? Not Yellow Russian. I don't even know how to spell it. It's a place. Flag of Russia. Bielo. Does anyone know? Maybe one you. There it is. Bielorussia hotels. Let's go to Bielorussia, man. Oh, $34 a night, 5-star hotel. Yeah, boy. Why is it so cheap? They ain't got no money. Sputnik Hotel. Oh, man, I gotta go. The Sputnik Hotel. This is nice. Okay? Beautiful. Beautiful. Let's go. Okay, there it is. There it is. Which one do you want to stay in? Okay. Yeah, Minsk is nice, I imagine. So anyways, where do you want to stay? Which one costs more than $34? Okay. Maybe one is too cheap. Here's the academic thought process. Maybe one is too cheap. Maybe one is too expensive. And what is the difference in the economic and social decision making for investment into both physical capital and human capital? And how does it change productivity? And as productivity changes, of course, we're looking at the rate of change. What's the rate of change? GDP growth. And when you look at the decision-making processes over the last 100 years, who's grown more? Okay? The United States, for example, or maybe you take a similar sized economy. Who's grown more? Let's say Taiwan and Belarus. Let's compare those two. Who's grown more in the last 50 years? And how did they differ? How did they differ in answering that challenge of how do you invest into physical and human capital? And what does it lead to? Okay. I was thinking Singapore is even too small. Okay. Too small. Cool. But anyways, interesting, right? So I don't think $1,600 a night is a stabilized situation. I think that's what's going down with COVID. And I think my personal opinion is there's too much stimulus checks went to people that don't need stimulus checks. And then we are definitely in a situation, from my outside observations, right? This is primary research, but not complete research. But talking to owners of golf courses, owners of hotels, owners of restaurants, and then me even going around my town and looking at similar situations, there's a drastic shortage of employees. People can get a job today. One of the fast food restaurants pays you now every single day you work. You go into work, and at the end of your shift, they send you the money. They deposit it or whatever, however they pay you. You get paid the same day. Every day you get paid. You go to work, you get paid. They're desperate. They'll do anything to get to workers, but the government has prevented workers from working. And if this continues on the long run, which I don't expect, it will lead to very bad results. And pretty soon you'll be able to stay at the Ritz-Carlton for $34 a night on Amelia Island. And now you might say, well, gee whiz, that's a good thing. Do you know why to stay at a decent hotel in Minsk is $34 in Belarus? Do you know why? Because nobody ain't got no money. You're rich if you have $3,400. So you might say, well, you got to be rich still to stay at the Ritz-Carlton for over $1,000 a night. Yeah, well, you got to be rich to stay at the Sputnik Hotel. $34? Are you crazy? That's how much I earn in a week. How would you like that? And no chance of getting out. Okay? So, $1,600 a night, $1,200 a night, too much. It's got to come down, and we got to find a true market equilibrium. $600 a night, I'll stay there, not a problem. Been there many times. Great. Nice. Okay? And then everyone will have jobs. If there's not market equilibrium, it will collapse. Okay? Capitalism will collapse without market equilibrium. Okay? Booms and busts are normal in a capitalist market. Overheating, overcooling, overheating, overcooling, too much investment, not enough investment. Okay? The government and the central bank are supposed to be around to balance everything. So what's the government supposed to do? If we're in a bubble and everything's booming, they raise taxes. And they save the money. Okay? And then when the market collapses, they have money saved, so they use the money to create demand. Okay? Keynesian economics. The problem is the government spends money when the economy collapses, the government spends money when the economy is booming, and blah. So, anyways. The worst situation in the world you can think of is the Ritz-Carlton in Amelia Island, Florida, drops rates all the way down to like a couple $100 because they're desperate to get people into the hotel because nobody has money. If that happens, we'll have income equality. Everyone will be dead broke. Does anybody live in a place like that? Anybody want to party in Minsk? All right. With that being said, I hope you're crushing it. I hope you're just making pips beyond belief. And if you're not, it's okay. Double down on your research, double down on your analysis, but also don't be so afraid and so focused on perfection that you miss everything. You understand? You don't want to look for perfection. There's no such thing as a perfect trader. I want you to focus on your analysis. I want you to focus on your trade plans, and you need to get in the market. And for that, you're going to have to take risk. Your analysis isn't to look for perfection. Your analysis is to contain and manage your risk. If you're a bull, you buy dips, maybe bottoms if you have to. If you're a bear, you sell lower highs, false rallies. Maybe tops if you have to, but you don't like it. But don't try to be perfect. Try to get opportunities and then manage your risk. There's nothing perfect about entrepreneurialism. Entrepreneurialism is about risk. Reward is a function of risk. But risk is bad. So it's like juggling chainsaws. It's very, very dangerous. But over time, you will get more skilled and protect yourself from horrible accidents. Juggling chainsaws. So maybe by year 10, year 20, it'll still be dangerous. There'll still be risk, but you'll be so good at managing your risk, but still getting opportunities, that it won't be like juggling chainsaws. It'll be like juggling kittens. You might get tore up from here or there, here and then, but you're not likely to lose some limbs. So remember, if your Forex trading feels like you're juggling chainsaws, your focus is to take opportunities, but the worst case scenario, it'll be like juggling kittens. You'll be able to survive the worst. Peace on earth. May the pips be with you. May our profits be above average. See you tomorrow. Thank you for being a subscriber. Thank you for the like. And all the resources you need have links in the description below the video.